Hello everyone, I'm Cory Mitchell with TradeThatSwing.com, and this is the first edition of the great value stocks to buy right now. This will be a regularly updated piece on the Trade That Swing website. Since this is the first one, this hasn't been quite published yet. I'm recording the video first, and then the article and video will go out together on the site. But for future updates, you'll be able to find it under the Investing tab. It'll say Great Value Stocks, so you'll be able to find it under that Investing tab to keep tabs on these stocks and future ones. So the idea is to update this regularly, probably every couple months or so, maybe every month depending on market conditions. As the market goes up, we generally get, and I mean the major indices go up and up and up, we generally get fewer of these great value stocks because prices overall just get more expensive and in stocks. There are a few, like even right now, the market's been going up for quite a while. Recording this March 25th, 2024. It's been a good time for the stock market, but there are still a couple deals out there, so that's what we're going to focus on today. Just a few little housekeeping notes on how this goes. We basically have a bit of data here. We're going to dig into it more in the video. And you'll understand what these mean as we go through the video, but basically we're looking at potential entry point, a estimated target. This might look a little funny to you at the moment, but we'll explain what that means. And then basically what our potential upside is, and this is over an estimated about 2-year time frame. So these are what might be classified as investments because we're holding them likely for longer than a year. We're going to hold them through some earnings announcements. It's not a swing trade, but it's also not a long-term just buy and hold these stocks forever. They have not been filtered for that kind of criteria. I do have another list of stocks, the best buy and hold stocks list, which you can also find under the investing tab, best long-term, best dividend. Those are different criteria. They're meant for a little bit more holding for longer periods of time, multiple years, shown a really strong track record. These are more good track record, but also beaten down by the market for some reason and could see the bounce. I don't have a stop loss level marked on here. Set your own risk limit and stay within it. These are evolving trades because we're holding them for a year or more. The inputs that we use, the earnings, how the company's growing, how the company's doing, these things evolve as the trade progresses. So I'm taking that into account as it goes, and I may scale into positions, I may scale out of positions. So please do your own, use your own discretion when trading these stocks, because I'll do my best to update this page, but I'm looking at the data and I'm making trading decisions in real time based on that data, and my views may change over the course of a year or two. What this basically looks for is, these are the very basic criteria. What I did was I ran a scan that includes, at the moment, it had about 172 stocks that met these criteria. Then it got filtered down to the 3 you see above, which basically meet this top criteria out of that bigger criteria. They're trading at less than half of what a common PE value would be multiplied by next year's EPS expectations. So basically, I looked at what kind of would be a reasonable, I guess you could think of it as a reasonable valuation for this stock. And if it's trading at less than half of that, then we have 100% potential upside. And that's what I was looking for in that main list. Then the main list, which created the 172 stocks, which was filtered down to 3 by this, just looking for steady EPS growth. Basically, we want to see that company growing, increasing their earnings, increasing their sales is down here. If they have like a little dip, that's okay, because that little dip is what often sometimes gives us the deal. If they can get right back on track and start increasing their earnings and sales again, then all those investors who sold on that little dip in their earnings get back in. All the hedge funds realize, like, okay, this company's back on a good track. They start buying it again. We want to see a history of EPS growth. So over the next 5 years, we want to see EPS analysts expect earnings to grow by at least 9% a year. And over the last 5 years, we want to see that they've actually proven they can do that. A, B, and C financial health ratings only. No highly speculative companies in very bad financial positions. That would be like D, E, and F type ratings. So these are courtesy of Morningstar. Only profitable years in the last 5 years. So no negative years. Sales have been increasing, as mentioned. Shareholder yield isn't negative. This means the company isn't generating money just because they're issuing shares. So this happens, you'll see this as companies decline and get in bad situations. They just start issuing shares, and it can sometimes make the company look a little bit better than it is, but we want to avoid that. So we're going to look for a shareholder yield that isn't negative. If a company is issuing shares, their shareholder yield may be negative or less than their dividend yield if they pay a dividend. If they do pay a dividend and they're buying back shares, their shareholder yield will be higher than the dividend, or the shareholder yield will be above zero because they're buying back shares, which is basically essentially a yield to investors. I haven't included highly cyclical or more speculative industries. So I've knocked out biotech. That was not included in my major scan. And I also didn't include energy and base materials. That does not mean they're not good sectors and that you shouldn't trade them. It just means for the purpose of this scan, those would fall under maybe other criteria that I would look for. They don't quite match what I'm trying to do here. Stocks get cheap, and then I want to wait till they're turning higher before I buy. So I want to see some sort of bottoming and coming up in the price. I'm not just buying on the way down. This helps avoid the situation where the stock just keeps going down and could continue to do so. If you want some information on this, we're going to go through it briefly, but how targets are calculated. You'll see these weird numbers up here, 25 to 30 times 4.58. What I'm basically looking at is a common PE, as I mentioned up here. So we'll look at some examples of that. And then we're looking out to next year's earnings. So this is an estimate by industry analysts who research these companies, listen to all the earnings calls and things like that. And I'm recording this on March 25th, 2024. So next year is 2025. So this is a snapshot of Yahoo Finance. So at any time, if you want to see future earnings estimates, you can pull up a symbol. So I'm just using WNS because it's on our list. If you click on analysis at the top, you'll see earnings estimates, average estimate, next year, and a number. So that means $4.58 per share is expected in earnings. If that were to occur, up here we go, and I'll show you how I do this, but 25 to 30 for this company is a reasonable assessment of where the PE could be. You can see right now it's at 15.8, so it's very low compared to where it typically trades. So if it goes back to a more typical level multiplied by that share price, then by the expected share price, then we expect a target of about $115. Right now, I believe it's trading around 50. We'll look at the stock chart. So I have an estimate of about a $55 entry price once it starts moving up, but we'll see. So 115, and that makes sense, right? Because if the PE is closer to half of what it used to be, then, or what it normally is, then if we have a little bit of growth in earnings, plus it goes back to where the PE normally trades at, which is just price multiplied by earnings, then, or price divided by earnings, then we have that stock at basically double where it is now. So we have the upside potential there. So that's how we figure it out. The common PE part, a little more discretionary. I'll show you a little glimpse into how we do that. Disclosure, I may end up purchasing some of these stocks or not. This page is essentially my own great watch list, ones that I think are good value, and then I have opted to share it on the website. So use at your own discretion. These are not recommendations for you to necessarily buy or directions on when you should exit. I don't know your personal circumstances or your personality or anything like that. So this is basically just my watch list, and then of course I have lots of other stuff going on, day trading, swing trading, these other investment watch lists. So it's really an allocation of capital in terms of whether I can trade all these stocks or not. So just full disclosure on that. So let's dig into these stocks. So each one has what I would call a reasonable expectation of a greater than 100% rally. WNS, PayPal, Centene, and you can see here the current PE ratios, the forward PE ratios. This is the 5-year range, basically what the PE has fluctuated between. And basically you multiply the PE times the earnings, and that gives you the current share price. And that's why I was saying, since these are really low, if they go back to more normal levels, then we could expect a share price. Sometimes stocks get to very extreme levels. We're seeing kind of an extreme to the low side based on the historic average. They can also go extreme levels to the upside. So the price could well exceed these targets I have set. If that would really bother you to miss out on that, then once it hits kind of normal levels, like let's say 25 to 30 in these cases, Centene, I put about a 20 PE on it, and it's trading at a 15.6 currently, forward PE is 10, then we would put a trailing stop loss on it or something. Use a 50-day moving average or a 100-day moving average so that you can potentially capture if the stock keeps running and moves up to a crazy high PE. But you'd want to control your risk. At that some point, you've made a nice profit, and yeah, throw a trailing stop loss on it. You don't want to always just be like launching your target up higher and higher and higher, because then you're going to have a lot of trades that never hit it, and then you end up holding through the big decline when either the stock falls or the market indices fall, and all the stocks just get swept down with it. So let's look at these stocks here. So this is the Stock Rover research engine, something I use very regularly. And you can see I have the stocks pulled up here. So let's go through WNS first. So this is EPS 5-year growth estimate. This is basically what analysts expect EPS will grow by over the next 5 years, and it's per year, so about 11% growth per year. For reference, the S&P 500 average is around 9%, so this is a little better than average, and we also have a stock trading at much lower valuation than the S&P 500. So a forward P, that's using future earnings at 11.2, and PE of 15.6. S&P PE ratio right now is around 28, I believe. So we're trading at about kind of a half valuation. And we look over here, and this is what I like to see, is basically just, you can have like a year or two off where it kind of stagnates a bit, but we want to see this increasing EPS. Like basically this company is just becoming more and more profitable. This year it made $1.08, the next year $1.10 per share. And then it went back to $1.08, then up to $1.90, $2.26, had a little bit of a drop. And now, it's just kind of storming ahead. We look at the sales. It might fluctuate a little bit, but it's pretty much just going higher, right? And this is what we want to see, just that steady uptrend, because in the earnings and sales, because then when the stock's at a good valuation, you at least know you're buying a quality company. You're not buying a piece of crap that is dropping for good reason because the company's just making less and less money. It's getting maybe closer to bankruptcy. In this case, you actually have a company that's doing much better, and for whatever reason, it has been sold off by the market. So lots of metrics we can look at here. But yeah, those are the main ones that I'm looking at. Just is it increasing in earnings and sales? EPS 5-year average. So this is over the last 5 years, 11.5%. So you can see it's a pretty steady grower. As we saw, we can see these little stagnations certain years, but overall, like if you look at 2 or 3 years, it's increasing its average, or it's increasing its earnings and it's increasing its sales. This is the one that usually flags it a bit for me if we look at the 5-year range for EPS, is it trading right at the low? That indicates possible valuation. Now now we have to go through all this type of stuff to see, like, is there a reason this stock is trading at a very low valuation? And of the 169 other stocks that I looked at, I found good reason for why they were maybe trading at a low PE, or maybe they weren't trading at a low PE. So they met my other criteria, but they weren't trading at a good value, or they were maybe trading at a good value for good reason, because they're maybe not doing so well lately. So this, flags it for me. You can see we're just sitting at sort of the value end of how this stock typically trades. And you can see the PE value over here. So this shows the last 5 years. I've expanded it out a little bit. And we can see there's only been a few occasions where it's really gotten down to this kind of 15 area in 2020 for COVID and now. And I'll look at usually a little bit more data if it's available, like back to 2012 or so, to basically come up with an area of what is a good valuation. So looking at WNS, 25 to 30 is pretty common. Like back here, we traded at 30 for a long time, went a little bit above it, then we had the big tank, and then it goes right back to 30 and above. So while this stock sometimes does go up to a multiple, whatever its earnings are, times 30. So if we look at the earnings, current year 433, next year 458. So if you multiply 458, $4.58 times a multiple of 30, which is basically what this chart is saying us, this stock often trades at around a 30 times multiple or a bit higher. Here, just traded there for a long time and then started its drop. We're looking for those levels of extreme value, like right now, where it's trading at 15 and could go back up to 30. So the stock price right now is, whatever its earnings are multiplied by 15. And we're saying, well, if it goes back up to 30 and earnings get up to this next year, well, then we could be trading at, about $137, $138. The stock right now is trading at 52. So let's quickly pull up the chart and show you what I'm talking about. I don't like catching falling knives, so I'm going to wait for this price to bottom out a little bit and start showing some signs of increasing activity. This is a increasing bullishness. So let's just pull up a chart of PayPal, because WNS is the only one on the list that hasn't really done this yet. We can see PayPal moving lower, 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 and then we just start to see a bit of evidence to the upside of, we had this little swing high here. It's moving up. This sort of rounded bottoming pattern. So these are the things I just like to look for. The pattern might change a little bit from stock to stock, but we want some evidence that, we're making some higher highs, we're making some progress to the upside, we're moving back to highs after this level. So, anywhere in here, I don't mind buying PayPal. And then, you can set your risk limit, whether it's, below this swing low, or maybe you put it back below this low, or just say, if I'm entering here because I think it's going up. If it drops 10 or 15%, then I'll get out. So you can set your own risk limit, but that's basically how I assess these trades. So it's starting to move up. WNS still in a bit of free fall at the moment. So we'd want to see some sort of, maybe something like this. Don't know how long this could take, but something like that. And then once we have that move to, a higher swing high, then maybe we get a little bit of a pullback, and that's where we start to get interested once the stock starts moving up again, because now we have a bit of evidence. We made a higher swing high there, we made a lower swing low there, and started moving up. So, I'm kind of estimating this maybe happens somewhere around in this area, so my entry point might be around 55 or so. But the stock's still falling, so I'm not just going to buy it at the moment. I like to wait for the move up. So that's WNS. Let's move on to PayPal. Growth estimate, 18% per year over the next 5 years. That's what analysts expect. Over the last 5 years, it's done basically the same thing. So this shows some consistency. let's go back to the summary or the visuals. You can see it took a little bit of a ding there in 2022, right? We were moving up, and then earnings got crunched a little bit, which took the wind out of the sails. Also notice that stocks get overheated. As I said, like this typically trading at around a 50 PE, and then all of a sudden went up to 130 PE in 2020. And, earnings were increasing, so people got really excited and just jacked the price up to $300 when earnings were around $3. So, over 100 times price to earnings. And so part of that collapse was just euphoria collapsing. And then also we had this dip. But like I said, we want to see that coming right back. So 2023, $3.84 a share. Projected for 2024, $4.66. That's increasing earnings. $5.11 for next year. So what's a good PE for this stock? Well, you can see it often trades at high PEs, 50 and above. Lately, it got down to about 30, and right now we're down in that 16 area. So near the lowest end, got to 14 here not too long ago. This is why we wait for the move up, because sometimes it gets to a low PE, but we haven't had the stock price starting to rise yet. So we want to wait for a kind of a convergence of factors. The good PE or in the good value range, then also the stock moving up. We also want to see, these types of things, that projections are good, that the company has been good. So forward PE, 12.9. Buyback yield, if we're buying back shares aggressively, that helps out investors. And yeah, just lots of other things we can look at. 5-year range can sometimes give you insight into a good value occasionally, but you'll see sometimes when you look at like CNC, it's actually moved up quite a bit off its low, but still could be presenting a good value, possibly because the stock price hasn't caught up to the earnings growth. So yeah, this one at 5, and I put it at a PayPal at about 30. So that's a conservative estimate based on what the stock has traditionally traded at. 30 would be, this kind of area here where it's often traded at, and often traded at much higher levels. Now, I want to be a little bit conservative. 20 to 30 is a pretty common valuation for many stocks. So if P values have always been really high and we're trading at a discount, then I'd rather be a little conservative and say, okay, we're trading at 15 now. We could get up to 30 if investors get excited about this earnings growth that's expected and if it actually comes to fruition. And then, like I said, if the stock hits 150, which is the price target, and it's still going strong, and at that point you have, you'll probably have another year of earnings projected out, and if it's let's say at $6, maybe you do expand your target out a bit, but I would be more inclined to just use a trailing stop loss type thing. If you're trying to extract more, use a moving average or something to tell you when to get out. So if it's running well, great, but really I'm looking kind of at a conservative, reasonable target, and you can always just move on to the next trade if you have other ones, or you can try to let it run a little bit. So let's look at CNCC. PayPal, we already looked at the chart. Kind of bottoming out a little bit here. And let's look at CNC. Centene also bottoming out, had this big sell-off here with a lot of stocks in 2020. You start to see this bottoming process. So, as this has moved up, I've just kind of noted a little bit of a trend channel here going on. So, along the bottom of this, and it may dip below it a bit, but overall, based on the valuation, I like it kind of anywhere in this area. So let's look at it. Centene, I said about a 20 PE, so let's look at why that is. So earnings growth, 11.7% expected. Over the last 5 years, it's grown 17% per year on average. So showing a good history of being able to produce solid earnings and it's expected to continue going forward. You can see trading at the low end of its PE range. Maybe got a little bit euphoric at certain times. PE 15.6, so definitely at the low end of its historic range. But you can see often before this spike up in 2021, 2022, this 15 to 20 area is pretty common. So that's why I said, a 20 PE, probably a decent valuation for this company, but earnings are also growing, so it's trading at a bit of a discount right now, right around that 15 level. So we have a bit of upside in terms of PE, but then we also have this growing earnings, which, if we can get up to a 20 PE at these higher levels, just over the next while, we could see a pretty decent return. So they're also buying back shares, sales increasing nicely. Let's go to that one. So you can just see, boom, 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 like each year, just increasing their sales. Overall, nice big uptrend in terms of earnings. Yes, there's occasionally a year or two where it dips a little bit, but they get right back on track and keep moving up. So overall, I like this. So based on this, projecting out $7.60 times 20, that gives us a target of about $152. And if we can get in here around 77, 75, that's about 100% upside, right? The stock could potentially double. So 75 up to 150. And that looks like way up there at the moment, but given several years, you can see we go on these big runs where stocks can, double. This one went from, off these lows here, 26 up to $70, so more than doubled. So basically when the market value finds the value in the stock, we can have these bigger run-ups. And you know what? If you decide if it doesn't run, if these stocks don't quite act how we expect them to over time, then we have additional data points coming in. Maybe there's a reason. Maybe even though these expectations, these are the current estimates, maybe some of the hedge funds don't agree with these. And maybe that will come to fruition over the next little while, and these estimates start dropping. Then we can always exit the trade and say, what, this isn't quite the trade I got into. It had 100% upside when I took it, but now they're estimating only $7, so that drops it down to 140 or maybe 650. And, maybe that upside just gets less and less, and it becomes less worth the risk to you. So that's why I said we're always taking in this... it's a dynamic situation because we're holding these trades for months, years, and it unfolds as it does. So those are the ones that I like at the moment. WNS, PayPal, CNC. WNS has to actually form a bottom. I want to see that rounding out. But at the moment, based on current estimates and a reasonable PE, the potential for 100% upside. And just be aware also that market conditions, each week I post a market update under the stocks and market analysis section. It's a little bit more based on swing trading, but it just looks at the health of the market. And if we see bigger drops in the S&P 500, NASDAQ, then I'm more inclined to exit and then look for entry points, because when the indices start dropping, pretty much everything starts dropping with them. And I don't mean like on a 2% pullback or anything, but once we start to see heavier selling, and even if these are holding up okay, I may take profits, and because usually everything gets wiped out with the indices, and then we get to buy it back at a lower price. So an evolving situation. That's why I said please do not view these as trade signals. Use your own discretion in how you want to trade and manage these trades, but these are the ones I'm looking at right now for potential trades for the next year to possibly 3 years.